Hey, what's going on, y'all? My name is Brandon, and in this video, I'm going to be going over 7 high-yield ETFs that you can start investing in today to earn monthly income. If you're somebody looking for a steady stream of income from your investments, then dividend ETFs might be the perfect fit for you. But with so many options, it can get a little overwhelming, so I've compiled this list just for you all to keep it more simple. Also, throughout this video, I'll be talking about expense ratios, but if you already know what an expense ratio is, then feel free to skip this explanation. An expense ratio is a fee that an investment fund charges its shareholders for managing the fund's assets. This fee is a percentage of the fund's total assets and is deducted from the fund's returns, so it's an important factor to consider when choosing an investment fund. For example, let's say an ETF has an expense ratio of 0.59%, which means that every $1,000 you invest in the fund, $5.90 would go towards covering the fund's operating costs. This amount would then be deducted from the return that you receive. Now that we have that clarified, let's jump into the video. The first ETF on our list is the Global X Super Dividend ETF, or SDIV for short. The Global X Super Dividend ETF seeks to track the sole active Global Super Dividend Index, which measures the performance of the top 100 highest dividend yielding equity securities worldwide. With an expense ratio of 0.59%, this ETF has a yield of 7.8%. One thing to note about this ETF is that it has a high concentration in the financial sector, which approximately 32% of its holdings is in financial stocks. However, this concentration is somewhat offset by its global exposure as the fund invests in companies from around the world. The next ETF on our list is the iShares Select Dividend ETF, or DVY for short. The iShares Select Dividend ETF tracks the Dow Jones U.S. Select Dividend Index, which measures the performance of high-yield dividend-paying U.S. companies. With an expense ratio of 0.39%, this ETF has a yield of 3.4%. This ETF is heavily focused on large-cap U.S. companies, with almost 90% of its holdings in companies with market capitalizations over $10 billion. The top 3 sectors represented in the funds are financials, consumer goods, and utilities. Next up on our list is the Invesco S&P 500 High Dividend Low Volatility ETF, or SPHD for short. This ETF tracks the S&P 500 Low Volatility High Dividend Index. This index includes the 50 least volatile high dividend yielding stocks in the S&P 500 index. With an expense ratio of 0.3%, this ETF has a yield of 4.3%. This ETF offers a way to invest in large cap US companies with high dividend yields while reducing overall portfolio volatility. The fund's top sectors are utilities, consumer goods, and financials. The fourth ETF on our list is the Wisdom Tree US Small Cap Dividend ETF, or DES for short. This ETF tracks the Wisdom Tree US Small Cap Dividend Index, which measures the performance of small cap US dividend-paying companies. With an expense ratio of 0.38%, this ETF has a yield of 3.8%. This ETF is unique in that it focuses on small cap companies, which have historically provided larger returns than large cap companies. However, small cap companies can also be riskier than large cap companies, so it's important to consider this when investing in this ETF. Next up on our list is the Invesco KBW High Dividend Yield Financial ETF, or KBWD for short. This ETF tracks the KBW NASDAQ Financial Sector Dividend Yield Index. This index includes high dividend yielding financial companies in the US. With an expense ratio of 2.4%, this ETF has a yield of 6.2%. This ETF is highly concentrated in the financial sector with over 90% of its holdings in financial companies. This concentration makes the fund riskier than some other ETFs on this list, but it also potentially offers higher returns. Next up on our list is the First Trust Morningstar Dividend Leaders Index ETF, or FDL for short. This ETF tracks the Morningstar Dividend Leaders Index. This index includes US companies with strong fundamentals and a long history of paying dividends. With an expense ratio of 0.45%, this ETF has a yield of 3.4%. The fund's top sectors are consumer goods, healthcare, and technology. And last on our list is the Global X Super Dividend US ETF, or DIV for short. This ETF seeks to track the performance of the INDXX Super Dividend US Low Volatility Index. This index includes the top 50 US stocks with the highest dividend yields and low volatility, which may be ideal for some investors. With an expense ratio of 0.45%, this ETF has a yield of 6.6%. The fund's top sectors include utilities, financials, and real estate. Keep in mind, while these ETFs do offer potentially higher yields, they do come with some risk as well. It's important to do your own research and consider your individual risk tolerance before investing in any of these, as this isn't financial advice. And as always, thanks for watching, and don't forget to like and subscribe to keep up with my latest personal finance videos.